What's going on, you guys? My name is Zach Hartley and welcome back to my weekly watch list video. Sorry I missed last week, I was out at a wedding, but now we should be back to our regular schedule. So in this video, I want to walk you through how I feel about the market conditions, and it's not very good because it's been a really rough week. And then I want to show you a couple of stocks that are at the top of my watch list. I'm going to show you a couple of ways to make money when the stocks go down, and I'm going to show you a couple of stocks that I'm watching for an opportunity to buy in on this dip. Here is everything you need to know. Let's go. Okay, so we're going to change things up a little bit today. I usually start with the NASDAQ, the Dow Jones, and the S&P 500, but today we are going to start with crypto because it has been the worst week in crypto that I can remember over the last kind of year and a half to 2 years. It's been a pretty rough few days here. I'm calling it the crypto apocalypse because basically all of our major coins right now are down anywhere from 18.9% all the way to 35% for all of our largest cap coins right now. So really, it's not been a good week for crypto. It hasn't been a good couple of months for crypto, but in the last 2 days here, things have absolutely tanked. Bitcoin's down 9.6%. Ethereum, the second highest market cap crypto, is down 15.2%. And we have a couple of reasons why. Number one, Russia is looking to ban crypto just in general. You cannot use it. They're also looking to ban and criminalize mining. So if you're trying to mine crypto in Russia, that could soon be illegal. We also had a pretty major hack from crypto.com. I believe they lost around $36 million worth of crypto, which is definitely not good to see. It's one of the largest companies, and if they can't keep their crypto secure, how the hell is everybody else going to do it? So that's one of the major concerns. And then rising interest rates reduce the effects of inflation, which is one of the main drivers that people hold cryptocurrency, is a hedge against inflation. And if we have rising interest rates, that will bring inflation back down, and it kind of lessens the need for cryptocurrency. So that's another thing that's in the back of investors' minds. And that is why over the last kind of 24 hours, we have seen more money coming out of the crypto markets than we have at any other point in the last few months. Now, that is what the crypto market looks like. Here's what the Bitcoin chart in particular looks like. And this is really bad because, so number one, we have our shorter moving average crossing below our longer moving average here. This red line and this blue line, that is what's known as the death cross, and that is a very bearish sign. We also have lower highs. You can see we had set a high around 68,000 and then 65,000, and then right here around 60,000 and then 55, right here around 43,000, and now we have just collapsed below our previous support at $40,000. This was a very clear level of support and resistance right here at 40,000. We have collapsed below that. We've also collapsed below 37,500, which acted as support back here in August, and now we are currently trading at $35,000 USD, which means we've lost almost 50% of the value of Bitcoin just since the beginning of November, which is absolutely mind-boggling. It's pretty crazy here, and it's not looking good. I don't see a whole lot of positive signs right now for Bitcoin. Maybe this is the bottom, maybe it keeps going. We're not really sure right now, but I have liquidated part of my Bitcoin position. I'm still mining, so obviously I still hold Bitcoin. I'm gonna hold a lot of it long term, kind of next 5 to 10 years, because I have that miner going. So definitely a big pullback right here. I will try and buy some more once we have a correction, but as of right now, we are going in the bearish direction. Now, let's dive into the stock market. And this actually isn't looking a whole lot better here. So here's our NASDAQ. This is the chart that I showed you at the beginning of the year, and I said there's two things that I'm watching for. Number one is when we fall through this trend line that I have drawn here. As you can see, we've got consecutively higher lows. All I've done is connect those lows, and it has formed a trend line here. We have now very clearly broken through that trend line. I said, okay, that's definitely a bad sign. What's the next sign, or what's the next kind of focus point that I'm going to be watching for? And that focus point was right here around 14,000, 14,200. And on Friday, unfortunately, we fell through that level. We broke down through support, and that was a very bearish sign. And so as of right now, the NASDAQ is in a bearish trend. Things are not looking good for the NASDAQ. And unfortunately, I actually expect this to continue a little bit further. We have fallen through our major level of support here. I'm thinking the next level is probably going to be around 13,000 and then 12,400, 12,500, hopefully. We'll see what happens over the next few weeks. But as of right now, the NASDAQ is in the bearish direction, and I would not be buying into it until we see a bit of a correction here and a bit of a support level forming. Now here's the S&P 500. As you can see, another very key trend line right here has been broken. We have not hit our next level of support right here around 4,300. But as of right now, over the last 5 to 7 days, it has been a very bearishly trading S&P 500. We are going in the downward direction. And when it comes to the Dow Jones, it has been a very quick fall from grace. We actually set new highs right here at the beginning of 2022. And then like literally the entire year, the Dow Jones has been falling. And this has a whole lot of banks in it. It has a whole lot of industrial companies. And it's not looking good. I am expecting hopefully a little bit of support right here around 34,000. But if on Monday we see everything open lower and the Dow Jones falls below 34,000 and the S&P 500 comes down to this 4,200 range, that's going to be a really rough start to the week, and there's going to be a lot of pain in the market. So here are what my thoughts are. Number one, we are in a bearish market. Everything is down. Crypto is down. The stocks are down. Industrials are down. Tech and growth stocks are probably being hit the hardest, and we have interest rate hikes coming no matter what. There's been reports of 4 interest rate hikes. There's been reports of 2 interest rate hikes. Nobody really knows. We do have some Fed minutes coming out this week, so it's going to be really interesting. Definitely keep an eye on that. But between an interest rate hike and Omicron right now, we have got some concerns in the market. So here is my plan. Number one, I am holding a ton of cash. I've been saying this in my Discord chat for months, probably the last 2 months right now, where I am holding a ton of cash because the market is choppy, the direction is not clear right now, and a lot of things are going down, and a lot of things I like to buy, growth stocks and exciting technology stocks, are going down right now, and that means that I don't want to hold them, so I am holding cash instead. Now I'm holding cash on a short-term basis. I'm not holding cash over a 5-year period, so I'm not really worried about inflation. So that's one thing to consider. And I also have stop losses on all of my positions. So anything that I'm into right now has a stop loss on it, and so far that has worked out extremely well for me. I just saved a 20% loss on Shopify and a couple other positions, so definitely I personally recommend trading with a stop loss. It allows you to buy back in at a lower price when we see corrections like this. Now, me, just like everybody else, we have no idea what's going to happen on Monday. I have no idea if the stock market's going to open higher or lower. So what I recommend for you and what I like to do is have a plan for both options. So if stocks go up, here's my plan. If stocks go down, here's my plan. So if stocks go down, what I plan to do is I plan to short the really bad stocks, or I will buy puts in the really bad stocks. These are options, and they basically make you money when the stock goes down. Now, if you don't like the leverage and the risk by buying puts or shorting stocks, what you can also do is buy an inverse ETF. Basically what this does is it tracks an index, except when that index goes down, the ETF goes up. And they're a really great tool for making money when stocks go down, because you can trade them like a stock. There's usually no commissions. They're super liquid and easy to get in and out of, and they're really, really convenient. And so I'm gonna walk you through the inverse ETF that I like to trade in just 1 minute, but I do wanna touch on COVID and earnings. And so COVID, here is just a chart of daily new cases in the USA. Obviously, it feels like most of these cases are Omicron, so probably not the deadliest. I don't see any of the daily new deaths skyrocketing at all, or at least that relative chart. But the daily new cases is definitely skyrocketing. It has gone up pretty significantly. And I believe in Canada, we actually set a brand new high earlier this week. So not looking good, daily new cases. And it actually feels like a couple of countries, I believe Australia and the UK, correct me if I'm wrong here, but they have said basically just let it rip. We're gonna treat this like the flu. We're gonna remove the restrictions and everything, and we're just gonna try and get on with our lives. So I'm really excited and interested to see how that works out for them, see if it'll work around the rest of the world. But I'm slightly concerned about the capacity of our hospitals. So that's probably the downside of that strategy, but we'll see how it unfolds for those two countries and then see if it rolls out to the US and Canada. Now, earnings this week. This is a big week. I know this is a long intro to the video, but we've got a lot going on here. So earnings this week, we've got IBM on Monday. We've also got Microsoft coming out here on Tuesday. We've got a couple of big ones here. Johnson & Johnson, GE, Capital One, CN. Then on Wednesday, we got Boeing and Tesla. Those are the two I'm really looking forward to. to. On Thursday, we got MasterCard, and then Apple and Robinhood. I have some options in eToro right now, so I'm really hoping Robinhood makes a nice little recovery here because they are pulling my options down right now. But I'm going to manage that risk accordingly. I'm really looking forward to this Thursday afternoon session though. And then Friday is Chevron and Caterpillar, a couple of big names. So it's going to be a big week for earnings, and it's kind of like the beginning of earnings. Well, I guess last week with the banks was beginning of earnings season. Okay, so let's talk about that inverse ETF. Now this is called SQQQ, and basically what this is this is an inverse ETF that tracks the NASDAQ 100. So when the NASDAQ 100, which is the 100 largest companies in the NASDAQ, when the NASDAQ 100 goes down, SQQ goes up. And when the opposite happens, SQQ goes up. And so what's nice about this though is that it's 3 times leverage. So let's say that SQQ goes up by 3%. Well, that means that the NASDAQ 100 went down by 1%. And if the NASDAQ 100 goes up by 2%, that means that the SQQQ is going to go down by 6%. So whatever happens to the NASDAQ 100, multiply that by 3 and basically do the opposite. That's what's going to happen on the SQQQ chart. And what's really nice about this one is that as tech has sold off recently, SQQQs has skyrocketed from like 28 to 41, which is some amazing gains. It's really nice, and it's a great opportunity to make money when stocks go down. And so this is usually where I would recommend people start if they don't want to short or buy options. This is a great opportunity. Now, if you are looking to short individual stocks, one of the stocks that I would be looking at here is American Airlines. I think these airline companies are really going to struggle over the next little while. And honestly, right now, I think more of what they are is a rewards program than an airline. I think that's where they make most of their money, which in my opinion isn't a great business model. And so American Airlines here, what I would be looking for on Monday, Tuesday, is I'd be looking for confirmation that the market continues to sell off, that there's some concerns about Omicron, the numbers are still high, and that the airlines are not going to rebound as an entire group. So I'd be looking at 5 or 6 different airline companies, and if they are all selling off, that is when I would go into a short position, or I would buy put options in American Airlines, probably for like a short-term period, probably for only a couple of days. And I would be looking for the breakdown rate here of $16. Probably take it down to $14 or $13, but that's the trade I would be looking for if the market continues to sell off on Monday and Tuesday. Now, if the market does not continue to sell off on Monday and Tuesday, and we see a beautiful rebound on Monday and Tuesday, and things start to look really good and we start to see a recovery, that's when I would be looking at some other opportunities to buy in on stocks that have sold off. And the companies I would be looking for, I'm gonna go through for you right now. So we're gonna start with Arcit. Arcit is really interesting because they're a quantum computing company, and I think I've analyzed 4 different companies, and so far Arcit looks like they have the most traction, the most signed contracts, and the most revenue that's forecasted to come in over the next few years. So that is why I like this company the best compared to the other companies I have evaluated. And as of right now, we have a very clear trend line forming with all of these different lows. They're consecutively higher lows, which is very nice to see. So we are still in technically a bit of a bullish pattern, but we definitely have some resistance right around $40. Currently trading at $17.75, and if we see a bounce off of support right here, this is going to be my first quantum computing company that I plan to buy. Now, the next company I want to talk about is Tesla. Tesla is one of my favorite companies. I love to swing trade this stock, and I'm looking to enter this stock if we see a bounce off $900. Tesla, for whatever reason, trades very strongly at big round numbers. So 900, 1,000, 1,100, 1,200, those are what I call big round numbers, and they seem to act as very strong levels of support and resistance. You can see this one right here at $900, we found support, and going back to our previous high right after the split, Tesla got rejected at 900, and so we got rejected at 900. That became resistance. We broke through 900 right here in October. You can see this breakthrough right here. We ran up to 1243, and then we came back down to 900 where it acted as support. I am looking to see if 900 acts as support again, and if it does, I plan to buy the bounce off of 900, probably back up to somewhere around 1,100, 1,200 for a short swing trade. Now the next company I'm looking for is Amazon. Amazon is one of those companies that I classify as a great company. I think in 5 to 10 years, no matter what, Amazon price is going to be higher, the company's going to be more important, they're going to be worth more, and they're honestly one of my favorite stocks. However, I took a small little addition to my position right here, and since then we have sold off. So clearly that was the wrong trade, that was the wrong position, but now we are approaching previous support here. You can see we found support right here back in October and just before April. We basically traded in a channel for the last year, and now we are coming down to the bottom of that channel, and I am hoping that it acts as support, because if we fall any lower on Monday, Tuesday, I'm probably going to cut the position, buy back in lower, and we'll see how things go. But if we see a rebound on Amazon at 2,800 right here on Monday, Tuesday, I think that would be a great show of good support at 2,800, and if we see some bullish action after that, I'll probably add to my position again. Now the next company here is Shopify. This is a company that I actually got out of on a stop loss up here around $1,200, which was really, really nice to see. And as you can see, it has saved me a bunch of money because we're now trading at $882. And so this is one of the reasons that I trade with a stop loss, because it saves you from big losses like this. Now Shopify is back down here right around 800. And so really, really interesting kind of turn of events. And now we will see over the next kind of 3 to 4 days here if 800, 850 holds up as support. I do expect it to hold up as support because Shopify, honestly, over the long term, again, it's not in that category of great companies, but it's pretty darn close. It's a fantastic business model, and they're expanding very quickly. They're also trying to compete with Amazon by shipping products as well. So I really like Shopify. Next one here is LICY. This company I actually bought into around $8 or $9, I think, here, and wrote it up to 12 or 13. So I did really well on it the first time. I noticed that we were starting to get a little bit of resistance here, so I sold out. The stock has now come back down to below where I bought in, and I believe it is actually setting all-time lows. This is a company that brings in scrap battery materials, basically shreds them up and turns them into new battery products that can go into batteries, basically the raw materials for it. And I really, really like their business model, because in the future, there's going to be more and more batteries to recycle. There's going to be higher and higher demand for those materials. So they have a beautiful business model. And as soon as we find some support and we start to move in the bullish direction, I will be buying back into this company as well, at least for a short-term swing trade, because honestly, I think this is going to be a massive stock 5 to 10 years from now. All right, now the last company I want to point out to you here is Adobe. Adobe is a wonderful company. They have one of the best CEOs in the world. They have a fantastic business model, and Adobe is just a great company that I think is only going to grow in the future. As you can see here, we found some major resistance right around the 500, maybe 550 mark, and now we traded as high as 700, and now coming back down right to this $500 level. It's very clear that we have a little bit of support here. We sort of double bottomed at 500. We found major resistance back here through the end of 2020 and beginning of 2021. And now it looks like we are at this very key level. If we fall below it, that's going to be a very bearish sign. But if we find good support here and we start to move higher, I think this is going to be a great opportunity to buy Adobe, because it's a fantastic, almost great company that is going to be there, that's going to be here for the next 20 years, and they're only going to be bigger in 20 years. So I really, really like Adobe, and I think they're going to do very well long term. Now, here's my summary. If the market keeps falling, I will be shorting stocks, I will be buying puts, and I will be buying inverse ETFs, all on a short-term basis. Probably in that 1 to 5 day time period is what I'm looking for when I go short on the market. However, if the market recovers, I'm going to use it as an opportunity to buy into my favorite companies, great companies, and long-term companies such as Amazon, Shopify, Adobe, LICY, and Tesla. Tesla's probably going to be the swing trade one. I like to swing trade Tesla, but that's just my opinion, and I really, really appreciate you guys watching to the end of this video. If you're interested in learning more about how to analyze these stocks, definitely check out my stock market course. There's a link down below. I also have a private Discord chat where I post all of my trades and analysis on a almost daily basis. And if you're interested in signing up for Questrade, which is where I get all of these charts from, there's a link down below for $50 in free commissions. Thank you so much for watching these videos. Good luck trading, good luck investing, and we'll talk to you soon.